Hello traders, in this video I will show you the 1-2-3 strategy. It is also known as a strategy of trading breakouts and it is probably one of the best short-term strategies. Of course, it depends on which time frame you use it on. I will show you everything about this strategy because it gives over 90% success and is extremely important for our trade. The most used time frames in this strategy are 1 hour and daily shadows. There are very good gains in both options. And let me show you how to use it to make good profits. Here we go. Traders, I will now show you how to trade a 1-2-3 strategy. As I already explained to you, this is a breakthrough trading strategy, or rather where you have a small correction, not Fibonacci repulsions or divergences formed, then there is a 1-2-3 strategy. A top is formed. There is a small correction. And again, the price starts to go up by breaking through the front top and closing a candle above it or forming a bottom. There is a correction and closing a candle below the last bottom. This is called a breakout. This strategy is to trade such breakthroughs, no matter if it is the last bottom or the last top that has formed. Now, I will show you in detail when is best to trade and when it's not good to use this strategy. Let's start. Strategy 1-2-3 is traded on breakouts of previous tops or bottoms, but there are strict rules that must be followed. It is formed after a trend reversing figure. Of course, not only after trend reversing figure, but then it is best formed, head and shoulders or double bottom or double top. It is formed 2 or 3 times according to the new trend, but no more. No more because it usually reaches a weekly level after 2 or 3 times. And we already know that if the price reaches a weekly level, it is not good to launch deals, because there can be a strong repulsion at this weekly level. We draw these weekly levels to know where we must look for any long or short deals. It is formed as follows. There is an upward wave, or there is an impulse wave upwards. Then there is a correction. The correction should not be equal to the impulse wave. There is a wave, an upward impulse, and then there is a correction. Small, maximum correction that we can look for in this strategy is up to 50% on Fibonacci. Even a little before 50%. It should not touch the 50% level by Fibonacci. Of course, if the correction touches 50% Fibonacci, you should trade it on Fibonacci, not 1-2-3 strategy. 1-2-3 strategy is marked as follows. The first point marks the beginning of the impulse wave. The second point marks the end of the impulse wave. And the third point marks the end of the correction. Which correction? When it is small and the new upward movement begins, we wait for a candle to close above point 2. Point 2 is the last stop we have. If a candle closes here, we directly enter a deal, and I will show you how big the profit should be. Actually, the profit and the stop here are 1-to-1. Now, I will show you how it works. The correction should not be equal to the wave. It can be a maximum just before 50% on Fibonacci. Then, there is a new wave up. In a downward trend, it's opposite. There is an impulse wave down. A small correction, a new impulse wave down. Entry in deal is considered when the candle breaks and closes above or below the previous top or bottom. Example with bottom. We have a beginning and end of an impulse wave. Then a correction is formed. Third point is the end of the correction. It can be seen that this correction is small, and I want to specify that when there is a correction, how many candles there should be at least to say that there is a correction. If you are on a 4-hour chart, 4 or 5 candles are enough to say that there is a correction. If you are on a daily time frame, 2 candles are enough to form a correction. But on a 4-hour chart or on 1-hour chart, it is not possible to have only 2 candles and to say that there is a correction. For example, here it has a rise. Most people will say that this is a top and this here is a correction, but this is not a correction. With 2 candles, no tops or bottoms are formed. This is not a correction, but a whole upward movement. Then there is a downward movement. Here there is already a correction, because there are 5 candles. 5 candles form a top or a small correction. Then there is a nice big candle that breaks and closes under point 2. We draw a horizontal line under point 2 to the right and look for only one return, one correction if the price starts to move sideways, or to make 1, 2, 3 corrections aside like this option, then you will most likely have some kind of triangle or flag, but you will not have 1, 2, 3. 1, 2, 3 is a strategy in which there is a small correction and a very strong downward movement begins. The entrance is after closing the candle under point 2. If you have buy position, it is above point 2. We will now consider the other option. The stop is placed 5 pips above point 3. Point 3 is the end of the correction. Or we put 5 pips more on the stop just in case, and we make the profit equal to the stop depending on, of course, where you enter the deal. Here, this option is perfect, and the candle is closed almost on the line. A slight breakthrough is made. But if the candle makes a bigger breakthrough, or over 20% close to the take profit, then there is no point in entering a deal because the stop will be very big and the take profit will be very small. Now I will show you such options. The profit is equal to the correction. After the candle breaks and closes above or below the previous top or bottom, we measure the distance between the top point 2 and the bottom point 3 of the correction and apply it after the break or to the next level, support or resistance. For example, we have 1, 2 and 3 points. I drew a horizontal line and I measured the distance from the second point to the third point with an arrow, which arrow I take and apply from the second point down to determine how big the take profit should be. When the entry is close to point 2, we break 1 to 1 until the breakthrough. If I have 100 pips, 105 pips in this situation is our stop loss, so we will put 105 pips for take profit. But if the candle closes more than 20% of the take profit, I will not enter this deal. Now I will explain and show you these options so you can understand. The stop is placed 5 pips above or below point 3, depending on whether you have short or long position. Here are some examples. By the way, you have 1, 2, 3 indicator and in MetaTrader 4 also. I gave it to you at the end of the course. You have additional things like indicators and books. There you will find this indicator called 1, 2, 3 pattern. We continue. Here we will take an example first. We have a very strong rise. We have a correction. This is on a daily chart. Then see the indicator shows when the candle closes above point 2. See, then measure the distance from here to here and look for it as a take profit. It happened. Then we have a second time, first point, second point, third point. And see again this candle closes above point 2. Or we have a breakthrough on the previous top, and again we are looking for 1 to 1 the whole movement. It is obligatory if you take profit exceeds some previous level of support or resistance, or daily level, weekly level, it is obligatory to do it at the level itself. Do not look for bigger profits. We always make the level so that we know where we should collect our profits and respectively where we should see some reversal of the price. Consider all the deals you make with these levels. Here's an example: impulse, correction, breakthrough, and closing a candle above point 2. Point 2, again, I say you draw a horizontal line and the candle should close above this horizontal line if you have buy. If you have sell, below the line. First, you adjust the stop. For example, you make 5 pips under point 3. If this is equal to 100 pips, you adjust the take profit to 100 pips, 1 to 1. Here it is again. We have a strong impulse down. Here begins the first point, the second point, and the third point. You see a breakthrough and a level test again. A very small correction here. We have no repulsion according to Fibonacci, and see the price starts to break through, as I have made an alarm here. In case of a breakout, it would tell me to enter a deal. Then the alarm at Euro Australian dollar, you can see crossing down, and I made a take profit, stop loss, absolutely everything. And here's the candle that closes under 0.2. Here we have entered a deal. We set the stop above 0.3. The take profit just before the previous level. And here's how the price moves. It was already 115 pips on profit. We know that if a price passes 100 pips on profit, we collect our profit to be 100% sure that we will not lose from the deal. Now, let's look at 1, 2, 3 for buy first so you can understand. You see, the impulse wave starts from here down, but there is a strong uplift here. Usually this strategy works very well when there is a breakthrough and a test of a previous level. We will now consider this example. Then I mark points 1, 2 and 3. The first point is the beginning of the impulse wave. The second point is the end of the wave, or the top that we are waiting for the price to break again in order to enter a deal. And the third point is the end of the correction. And now, when the price has already made a good bottom and has started to go directly up and broke 0.2 and closed the candle here a little above 0.2, then we come and measure the distance from this horizontal line right from the top of the tail to the end of the correction again to the tails. The whole distance is taken by cloning this line or taking this arrow and applying it here from 0.2 upwards to determine how big the take profit should be. And now the profit is equal to the stop, and again I say the stop is 5 pips below the last bottom. Here is where the stop is 5 pips below the last bottom. When you run this deal, here's the result. Then literally with 3 candles you reach the take profit. Here, before and after. Okay guys, let's look at an example of a strategy of trading breakouts, or the so-called 1, 2, 3 strategy. As we already said, it is best formed after a trend reversing figure. Here we have an inverted head and shoulders from a strong daily level. Then we have an impulse upward. Now we're gonna apply Fibonacci from the beginning to the end of this impulse wave to see where the correction we went. Let's see. Here we have 1, 2, 3, 4, 5, 6 candles. As we already said, we must have at least 5, 6 candles to say that this is a correction. This here is not a correction. If it was on a daily chart, maybe it would be a correction, but on a lower time frames, on 4 hour, on 1 hour chart, it must have at least 5, 6 candles to say that this is a correction. So in this case, this is a correction, and we can see that it doesn't reach the 50 or the 61.8% on Fibonacci. So we're gonna erase the Fibonacci for now. And we see that the price started to go upwards. That tells us that maybe this correction will be very small and a new impulse wave is coming. So we draw a trend line on the previous top. We're gonna name it 1, 2, 3. And we are waiting for a breakthrough, for a candle to break the previous top and to close above it. That is our entry in a long position. Here we're gonna enter a deal. Our stop loss is 5 pips under the last bottom, so it would be 71. We're gonna make it to 76.5 pips, and we're gonna copy these pips and make it as our take profit on this profit level. We apply it here, okay, because 1, 2, 3 strategy is 1-to-1 return ratio. So we're looking for the same take profit as our stop loss, because this is one of the best short-term strategies. Risk reward is 1-to-1. Okay, let's see what happened next. It took some time for the price to hit our take profit, but eventually it hit it. So again, it is best formed after a trend reversing figure, maybe a double bottom or an inverted head and shoulders in these situations when we are looking for a long position. we must have a strong impulse and a small correction, at least 5-6 candles. Then immediately the price breaks the previous top, and we must have a candle that closes above it. We draw our trend line here, and we wait for a candle to break it and to close above it. Then we enter a long position. Our stop loss is 5 pips under the last bottom, and we measure the pips that our stop loss is and apply it as our take profit, because the return ratio is 1-to-1. This is how the strategy of trading breakouts, or the 1-2-3 strategy, is traded. Let's move on. Another example. Here we have a huge upward movement. We can see we have many candles. The price has reached some level, so we're gonna apply Fibonacci to see where the correction we went. Here we are waiting for a repulsion of 50% on Fibonacci. Let's see. But we see that the price started to move upwards, forming a new strong impulse wave. You can see big candles upwards. So we erase our Fibonacci, and we're gonna draw a trend line on this bottom right here. Let me give a candle back. We draw our trend line here. We're gonna name it 1-2-3. And now we are waiting for a breakthrough. We are waiting a candle to break this previous top and to close above this line. So we're gonna enter in long position then. Here it is. You can see this candle closes above the previous top, breaking this trend line. So we enter a long position. Our stop loss, 5 pips under the previous bottom. In this case, 115 pips. Now we copy the pips that our stop level is and apply it as our take profit, because as we already said, the take profit and the stop loss are 1-to-1. So our risk reward is 1-to-1. Let's see what happened next. We can see that our take profit is hit. Okay, we move on. Here we have an impulse downwards. This is not a correction, as we already said. This here and this are not corrections. We must have at least 5 or 6 candles. This is really important, so that's why I repeat it. Here a correction is started to form, so we're gonna apply a Fibonacci retracement to see where to expect the correction to end and where the new impulse wave to go to. But then we see that here the price started to make a new impulse downwards, so we erase our Fibonacci and draw our trend line here. We're gonna name it again 1-2-3, and we are waiting for the price, for the new impulse wave to break the previous bottom in this case and to close a candle under it, and so we enter a short position here. Let's see. Here this candle closes under the trend line, under the previous bottom, so we're gonna enter a short position. But before that, let's measure. In this case here, this candle is 15 pips. It is okay. We're gonna enter a short position. But if this candle closes more than 20% of the take profit, it would be too late. We are not going to enter a deal here. Okay? Our stop loss, 5 pips. This time above the last stop. We open the settings and make it 82 pips. We copy the pips that we make as our stop loss and apply it as our take profit. Here we have a daily level, so we're gonna be careful on this daily level. Let's see what happened next. The price returned to test and then hit our take profit. Of course, here on this daily level you have to be aware that maybe the price will make a repulsion, so if you are not a risky guy, you can close a half of the deal here. Okay, let's see this example here. We have a strong impulse downwards. Then a correction started to form. We're gonna name the beginning of the impulse is our first point. Because the strategy is named 1, 2, 3, the end of the impulse is our second point. And the end of the correction is our third point. 1, 2, 3. We have an impulse, a small correction. If we apply again Fibonacci, doesn't reach the 50 or the 61.8 levels. So we erase the Fibonacci and draw a trend line on this bottom. We're gonna name it 1, 2, 3. And we are waiting for the price to make a new impulse downwards, to break the previous bottom and to close a candle under it. Let's see what happened. Here, we're gonna enter on 1 hour to see if we have a better entry. In this case, we don't have a better entry, so we enter a short position here. We're gonna adjust it on 4 hour. Our stop loss, 5 pips above the last stop, 150 pips. And we're gonna copy the pips and apply it as our take profit. Here is our entry. Let's see next. You can see it took a long time for the price to reach our take profit. But here it is 17 pips before the take profit. So in cases like this, when you see an engulfing candle here, you can always close the deal with, let's see, with 108 pips on profit, which is great again. So you watch the candles. In this case, when you're almost reaching, when the price almost reaches the take profit and it forms a formation of candles like morning star or engulfing candle or a big pin bar, it is better for you to close the deal. Okay. So guys, this was everything you need to know about the strategy of trading breakouts, or the so-called 1, 2, 3 strategy. I want you now to go to TradingView and find at least 15-20 examples, so you learn how to see it and how to trade it. Let's move on.